Hey everybody, welcome back to the Whiteboard Finance Show. Today I have an awesome guest who I'm personally a big fan of. His name is Jeff Booth. He has right around 194,000 Twitter followers, and he is the author of The Price of Tomorrow, which has over 600 4.5-star reviews. I gave it a 5-star review. The other people are wrong. My review is right. All joking aside, with thousands of copies sold, he makes a pretty solid case for deflation and moving forward. So if you want to just introduce yourself very quickly, Jeff, I'd greatly appreciate it. Thank you for coming on.
Thanks, really appreciate it. You gave me the best introduction. It's kind of all I need. I've been an entrepreneur for most of my life, and through that lens, saw what was happening with technology, and decided to write a book on it because I felt people weren't putting the puzzle pieces together to see what was going to happen on the two systems colliding.
Okay, so your pinned tweet, I'm going to read this verbatim, and then we can kind of open up the conversation from here, is, "We are told we need inflation. This is not true. It only seems true because the rules of the game were designed that way." Do you want to elaborate on that, please?
Yeah, and we're going to go down the rabbit hole here,
Please.
so if you think about just from what innovation is and what a free market would provide, you say entrepreneurs, to be able to be successful, have to deliver value to society, right? Otherwise, you wouldn't use their services, right? You wouldn't use Google. You wouldn't use the new thing.
Mm-hmm.
Just in general, if you take that statement as true, you question it if you want, but if you take that statement in general, that means if you're driving, if that entrepreneurial process or that entrepreneurial process must be deflationary, because you're driving more for less into society all the time, unless you're creating massive new industries that are replacing the jobs that before. If you add technology onto that path and what's happening to with technology, what entrepreneurs are able to do with technology, you're able to create abundance at a level that humanity has never seen with technology and then that entrepreneurial process. That force today is colliding with an inflationary policy, but that was essentially created by central banks for control of populations, and there's nothing you can do to stop it in the end. And central banks are going to try because we're so far over our skis on that inflationary policy. But if you just take that to your question, money is just a construct for our time, right? Like, what is money in the first place?
Mm-hmm.
It's you expect to work for something, or if you're an entrepreneur, create something, get paid a certain dollar for it. It's a trade for your time, and then you expect to spend those dollars later on. And so if you create inflation, if you kind of drive inflation out of printing money and creating more money, then you're breaking that construct. And as a byproduct, everything else is broken. The trust in that construct is broken, and every other pricing mechanism in the market is broken by that construct as well.
Yep, that makes sense. So how do you see the transition happening to becoming a deflationary economy, like the tools and the mechanisms behind that transition? I already know the answer to this, but for the viewers or the listeners that aren't familiar with your philosophy, if you can elaborate on that, please.
Well, I think, and I think Bitcoin is going to be a forcing function for that transition. In history, these transition times were always reset through wars. If you go back through history, governments always choose an inflationary path, and they always devalue their currency to be able to get out of something like this. To essentially too much debt, I have to hide the fact that the debt can't be repaid, and I have to deflate my currency or impair my currency to be able to drive inflation to be able to pay back the debt in real terms. And governments have always through history done that kind of parlor trick to be able to get out. And as they do it, it creates collisions with other that do the same thing. and a race for currency, race kind of lower currencies and manipulating currencies, which causes global trade to break down as everybody's manipulating their currencies. So that's what we're seeing today in the world, and we can expect that to continue. The world's never had something like Bitcoin as a off ramp from that system. The world's had gold before as an off ramp to the system, and that it traditionally did quite well in these events. But gold was always confiscated by the state or changed the rules because it needed to be controlled centrally, or it was stored centrally. This why Bitcoin is different is it provides that escape mechanism, and that escape mechanism is getting stronger and stronger and stronger, and more people adopting it. So it provides a tool or transition mechanism to a world where deflation will be natural.
So what are the benefits, in your opinion, of deflation? I guess going back to the thesis of your book, why are you a proponent of deflation in the first place?
Yeah, and this, for your listeners that don't understand what's happening, if that's the case, is going to be really hard to comprehend, because they're measuring everything through an inflationary system that was artificially created. And so I think you have to backstep a couple steps and just say, what is inflation? What is deflation? And inflation is quite simply when goods and services get more expensive versus your currency. So your currency is worth less. And deflation is the opposite. Your currency is worth more as goods and services get less expensive. So we should be living in a deflationary world. And because of technology, we should be living in an exponentially deflationary world. It should get cheaper and cheaper and cheaper. Abundance should move higher in our lives all the time. That is being blocked by central banking policies. Now, when you talk about the thesis of my book, I'm talking about the long-term path to humanity thriving. The short-term path, unfortunately, we're going to go through, like everybody would listen to this and say, well, we can't have deflation. And why would they say we can't have deflation? Is because if they looked at the existing monetary system, there's nothing backing it. Nothing except for a promise. Mm-hmm. And that promise is being eroded in real time because it's just credit. And if deflation happens, the unwind just keeps on happening. It keeps unwinding until you see the truth. Mm-hmm. With there's no money in the bank. There's no, all the pricing on top of that money is your house price, everything is an illusion, because we believe there's all that money there. And there's only just credit there, staggering amounts of essentially counterparty risk and different people promising that they have it. Mm-hmm. And it's not there.
It's similar to the Warren Buffett quote of, we'll see who's swimming naked when the tide goes out, kind of a thing.
Yeah, and so if you play that, and we'll get to the long-term impacts afterwards, but that's why it's so hard to see, because even in central bankers and everything else, what would you have them do right now? Mm-hmm. If they don't print at exponentially staggering rate, like if they don't keep doing it, it's not 4 trillion here and then another 2 trillion and then it's forever printing.
Yeah, and QE infinity.
Exactly. More and more forever. And if they don't, the unwind keeps unwinding, because it doesn't matter where it starts. That bug on the windshield could start from anywhere, but without printing, the entire thing just keeps on coming down until it could happen in stages. Right? It could. I'm not going to print. I'm going to wipe out tons of debt, and then I'm going to come in and save the banks, like we saw in 2008. Mm-hmm. It could keep on, but the system is so much more fragile than it was in 2008, and it's global. So the Fed is a backstop to the world today, and as those derivatives and everything else unwinds, or if it was allowed to unwind, it just keeps unwinding, and it looks so. And you go through, everything breaks. Politicians break, all our institutions break, everything else. So that's why today in the world, they're printing.
So what do you think are the consequences of this quote unquote QE infinity? I mean, we just saw, I believe, $4 trillion over 10 to 12 months, and they're adding another 1.9, I believe, at least in the United States. What are the ramifications for that for my listeners based on your opinion?
You see them everywhere, but people aren't, and people are starting to take notice. That's actually what's driving Bitcoin adoption. People are starting to ask questions. What is money in the first place if you can just make it up out of thin air?
Mm-hmm.
But does anybody listening to this believe that real estate should be higher than it was last year at this time? Commercial real estate, it's ludicrous. Does anybody believe we have a stronger economy than it? Is completely ludicrous. It's all made up. So there's a whole bunch of people that win out of that equation. If you have assets that rise, then you win out of that equation. But your win, if you're winning, picks the pocket of somebody else who is losing. It's a zero-sum game. So you hold asset prices high. You drive prices higher on rents and everything else, and people without those assets have to pay higher for rents. So then they come to the same government that created the problem in the first place and say, can you give me $2,000 so I can pay my higher rents? and then at a bigger level, we say oh yeah, everything's working just fine. The economy's thriving. Well, that's not thriving. It's just it's misallocated capital everywhere. You're holding prices high. You're not letting the market reset and find its true nature, and you're paying people more than to maybe sit at home, so that they can pay for those high prices that you created in the first place. So it's not in that type of economy, a managed economy like that looks a lot like it did in communist Russia. It looks like a lot like it did. We know how that type of economy works. They underperform free markets, and if they underperform free markets in time, all that is a concentration of control in governments. In terms of, I'm going to protect you,
mm-hmm.
but it leads to ultimate control in governments, who then enrich themselves.
It's basically the centralized nanny state, if you will. We know better than you. We're going to hold your hand. We're going to protect you from yourself, kind of a thing. I'm a big proponent. I talk about free market capitalism a lot on most of my videos and mostly on this podcast, just because this is more of a free thinking kind of a podcast, as opposed to my videos are a little bit more structured around a certain topic. What do you think, at least in North America? You're in Vancouver. I'm in the Midwest here in Cleveland, Ohio. What do you think we have today? I wouldn't consider this a free market, would you?
No, it's not. We have crony capitalism completely. The entire market it's not free at all. We want it to be. I think a lot of people believe it is, but there's no. The evidence says otherwise. There is no free market. If we had a free market, the collapse and there wouldn't be the bailouts. There wouldn't be the bailouts of the banks. There wouldn't be the bailouts of the airlines. There wouldn't be the bailouts. People say, and you could argue, well, we have to bail them out. But and a lot of people make that argument because otherwise the destruction is so bad. But you can't argue that that's a free market. It's not a free market.
Agreed. Yeah, sorry. Go ahead, Jeff. I apologize.
Yeah. No problem. So free market is harsh. The winners win. When you change the rules of a free market, you decide who wins. You change the game. You completely change the game.
Understood. So I'm glad you brought up real estate, and is your real estate really worth that much more than it was last year, kind of a thing. Since you are in Vancouver, I'm going to pose this question to you. You see a lot of people storing wealth from other nations in real estate in Vancouver, particularly Chinese. What are your thoughts on real estate in general as a store of value, based on your comment of, asset prices are inflating and that's kind of benefiting those people, as opposed to maybe taking that money out of the pocket of people who can't afford to be in those types of assets? So there's a lot of layers there. So I guess I'll simplify it. What are your thoughts on real estate as a store of value in general?
Well, you read the book, so you have a bunch of this. But if it took, people don't realize that in the last 20 years, it took $185 trillion of stimulus, either debt or stimulus or pulled forward demand, to be able to make prices go up. So we have 200, before COVID, we had $250 trillion of global debt. Known global debt. There's a whole bunch of black pools and unfunded liabilities that are way beyond that. But let's say known global debt, $250 trillion of global debt, running an $80 trillion global economy, with $185 trillion of that $250 trillion of global debt coming over 20 years. And so everybody that's in the system, remember when I said measuring the system from the system?
Mm-hmm.
When you're in the system and you think, wow, real estate always goes up, ask yourself, would it have gone up without $185 trillion of global stimulus? And it wouldn't have. Because when Chinese are buying in Vancouver, why are they buying in Vancouver? Because they're trying to get their money out of China to store their wealth. And if you were in the US and you know that the US has to devalue your currency, you're going to look for a store of value anywhere that'll protect that value. That's all that's happening. And it doesn't matter where you're printing money. It's all running to say is as safe as it can. I didn't answer your question yet. The answer is in the next 20 years or the next 10 years, do you believe that there's going to be another $185 trillion or 200 or $300 trillion of monetary easing and more accumulation? If you believe that, then real estate should perform well. If you believe that, but that doesn't become the tail risk on real estate. The tail risk, so at any time that could shut off and impair that value. But if you have a huge mortgage on that, then you're in trouble. But the tail risk on real estate is different. You can't move it. And if what we just said, and we continue down this path, you can expect uprisings, revolts, wars, revolution. And if your real estate happens to be in the wrong spot, it could be gone, or it could be confiscated from you.
Mm-hmm.
And that becomes, and again, look through history in these times, that's what happens. There's a redistribution of wealth from those who have to those who haven't, driven by a populist movement.
Do you feel like, so I am a student of history and I appreciate that. So my roots are from the Balkans. My mom is from Montenegro. My dad is from Serbia. That was never really Eastern Bloc, but my wife is Ukrainian, and you can see what happened with the USSR, obviously. What are your comments to Americans that say like, hey, that'll never happen in America. We have the Bill of Rights, Declaration of Independence, all that stuff. Are Americans naive with what you're saying? Or are you kind of just some, tinfoil hat, this has never happened before, kind of a thing? With all due respect, I'm just playing devil's advocate.
Yeah, no, again, you have the luxury of reading the book and seeing the themes through everything. I don't think people realize how much they change over time and how much they're manipulated to change their mind over time. And that manipulation, we hang out with people we like, we listen to people that would grab a message, and so if we believe that message, that it's not your fault, it's those people over there.
Mm-hmm.
Humans will do crazy things in the protection of that belief. If you look at the US, what's happening right now, you could say that's it. You can see this. You can see the road signs everywhere. It's happening. It's unfolding. You're in it.
Mm-hmm.
And the global, everybody is in it. It's coming to Canada about 5 years from now. But we can see early road signs, just like you could see early road signs of the US going through this transition. So mathematically, it has to happen. The global debt cannot be paid back. US debt cannot be paid back. There's no way you could grow out of it. There is no industry big enough, new industry, solar, anything else that's big enough to say, I can grow out of this giant debt pile that I did. So in other words, I have to, on the existing system, create money out of thin air and drive more inequality and drive more divide of society.
Mm-hmm.
That path leads predictably to what we're talking about. And you can see it everywhere. You like talk to your friends, talk to everybody. You can feel it around you.
Mm-hmm.
Yet no one's talking about the root cause driving it all. Money printing is a byproduct of technology moving so fast central bankers can't stop it. So we're not looking at first principles on how do we get across the divide. We're looking at how do we protect the old system. Meanwhile, knowing full well that the old system is driving all this inequality and making the world a really unsafe place to live.
Yeah, I think the Federal Reserve is one of the biggest proponents or dividers of society due to wealth inequality. If you're close to that, fiat spigot, the 1%, the politicians and all that stuff, you're living high on the hog. But, the middle class has been getting crushed since basically the 80s, I'd say, due to stagnant wages, while everything else is pretty much inflating, to your point. Explain how technology brings efficiency and abundance into society. So how is it ultimately deflationary?
So economics is around, and remember, people don't dig deep enough in economics or look deeper because the words sound complicated. QE, right? Quantitative easing, and people don't ask the next question. What is QE? You mean you can just print money out of nothing? That's it, and inflation. Oh yeah, inflation is good. Without questioning, why is inflation good? Why is it good or bad? It's not good or bad. It's a structure that we've agreed to run the world in. And that structure, when you say the Fed creating this, that yes, that structure has always existed, but technology is driving exactly the opposite way. And you can see that around you as well. Your phone is not just a phone anymore. 20 years ago, it was only a phone.
Mm-hmm.
Now, everything on it is free. And think about the things on it. Like, just sometimes I go and just a couple seconds on this, but think about your photos. Think about how great your photos are today
Mm-hmm.
compared to what they were 20 years ago. Think about the cost you pay for your photos. And everything else, and you have abundance. You can take 100,000 of them. Click, 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 click. You can portrait them. You can add all sorts of filters to them. All of that creates crazy abundance. So many photos that you don't even question. Wait, photos used to be $2 a photo, and I had to go to the shop and have them developed and everything else, and I had to choose the ones I wanted, and then I got those ones back, and they were terrible, and I wasted all that money. And now photos are free. Right? That's one example. It's one tiny example. Look at your phone. Just look at the home screen and all the apps that you have that are all free.
Mm-hmm.
And that's what technology does. It's why you use Google. It's why you use a smartphone. And so you have technology companies that understand this, that are building feedback loops, across network effects to be able to drive prices lower and lower, essentially give you more for less.
Mm-hmm.
And you have a policy that's trying to stop that from reaching broad-based abundance. So that policy. So if you don't take any business in that environment, if you're a business and you don't want to be controlled by the state, you don't want to be kind of a nanny state, and you don't have constant money from the state, what would you do? You would drive that innovation as fast as you could. It's effectively removing labor as fast as you could to use technology to give more for less so that you could thrive outside of that system.
Mm-hmm.
What investors would back you? Like, where do you put your money today as an investment? You put them in the monopoly technology companies because you see the path. So the whole thing just gets faster and faster and faster on a path to lower and lower prices. And there's nothing the government can do about it. Because it's a structural problem. It's not a people problem.
Mm-hmm.
We've created a structure that requires inflation to pay back debt. And if we let what should happen, it just unwinds to nothing. And And on the other side, we have a structure that gives us more for less and forces, on a free market, forces broad-based abundance to society. And it keeps, so things get cheaper and cheaper and cheaper for all time, more and more for less. And so a construct that I often use is you don't pay for the oxygen you breathe unless you're underwater, right? Or a firefighter in so why don't you pay for oxygen? Because you only pay for oxygen where it's scarce. You don't pay for oxygen where it's abundant. And so you don't pay for the air you breathe because it's abundant. And technology gives us that everywhere. But economics is built on scarcity. And so you keep looking all around you and what things that are going to be abundant, and you go, wow. I'll give you a concept that I haven't used on a bunch of podcasts, so we'll make this, that'll tie this kind of a business that will emerge for sure in that's not around us yet, so we misinterpret it. What's happening? Think about any product that you're buying, anything. That product is really just the information in somebody's head. So it's information put into atoms that we draw on sketches, and then have it produced somewhere else in a prototype, test marketed, see if all costing labor. Then we scale up production, say in China, ship that to distribution, then to stores, then to you, market against that thing that was in your mind to be able to create value. So you took information from your mind and you put it in a product. It could be anything, and think about all the cost in the supply chain and everything that's in that cost. Now with 3D printing on what's going to happen, that information that's in your mind is the same information that you're going to put into a computer program, and that computer program is going to, no, you got an error here, and then it's going to be printed anywhere at people's homes, and that entire infrastructure of products falls away, and as do all the jobs. And that information is free, and it's getting cheaper and cheaper and cheaper. So the roll up of what that looks like, it will look like Google for products. So sometimes, because somebody will capture, I'll put all these ideas together and capture a whole bunch of a marketplace for products that will look a lot like Google does for information today. And what you realize by some of these is you start to get into some of these thought experiments about what's coming in pretty short order, at least in human history time. How fast this is accelerating. So in pretty short order, what you realize what's coming just changes the rules so absolutely, so completely, that a different system must exist to allow that abundance to travel to society.
So it sounds like if that supply chain is indeed going to get eliminated at some point, or a lot of it, meaning displacing jobs or wages, for example, what are your thoughts on future-proofing yourself within society, just to be able to say, hey, I know Marco's going to have a job 30 years from now. If Whiteboard Finance goes away tomorrow, what career would you recommend that Marco gets into today, or what skill set would you recommend?
Okay, so so some people would say I'm negative on a whole bunch of, that couldn't be further from the truth. There are so many opportunities. The solar is an opportunity. The additive manufacturing is an opportunity. There's so many opportunities. It is the intersections of these technologies come together. The orthogonal AI and this, something else, visualization, 3D. When you look at AR, VR, and AI, or something like that, a couple technologies coming together at the right time to create crazy value. So, and those value shifts change structures of industries completely. So I sit on a board. I'm chairman of a board called Cubic Farms, and that company has now created commercial commercial grade farming that you could put in a box, call it a cube, call it a container,
Mm-hmm.
but essentially solved the energy input to make it cheaper to produce lettuce and way better quality locally than buy it from around the world in giant tract farming.
Mm-hmm.
So giant tract farming, which is all the efficiency goes into making the supply chain more efficient, and the supply chain requires the farmer can't lose a crop due to pesticides, can't lose. I need to bring cheap labor in to pick this. I need to, because it's so thin, it's so designed for optimization that it gets weaker and weaker and weaker.
Mm-hmm.
The system gets weaker. And then comes a company that radically changes. This isn't a promotion for cubic farms. Maybe it doesn't make it in anything else. But what the technology does, and what's happening at this company, and as a byproduct, you see the sales of this company, people can localize food production for way less cost. That's deflationary.
Mm-hmm.
And it changes industries and everything else. It's really good if you understand where those pockets of innovation are. And to your question, where are the jobs? Where can I go? Where can I train they're everywhere, because so in a time of great change, entrepreneurs can thrive. And when I say not just entrepreneurs, curious people, if you're really curious and want to learn everything, the world's your oyster.
Mm-hmm.
There's so much opportunity, but there will be a lot of upheaval through this time as well, and it won't look like that for everybody.
Yeah, I completely agree. I'm a big proponent of the tweet or the phrase "technology is the great equalizer." I really feel that if you have, a phone with an internet connection and you're curious, to your point, you can learn anything. And I think I'm starting to see that more and more. A common question that I ask on this podcast to all my entrepreneurial guests is, what are your thoughts about higher education, given that so much information is literally in the palm of your hand? I mean, do you feel like that's the next thing that's going to get disrupted, or do you think it's going to become almost irrelevant, to be quite honest?
Did you read my Medium post that called "The Greatest Game"?
The one with the shark?
Yeah.
I have it bookmarked. I did not read it. I know what you're talking about, though.
Yeah. So take a read, because I talk about a kind of a prison of the mind, and education being one of those.
Mm-hmm.
I've hired thousands of people. I can tell you who I would hire every time: the curious, driven person
mm-hmm.
versus the person with the Ivy League education.
Mm-hmm.
I'll tell you every time the curious, driven person, because they're constantly learning all the time, and they learn faster. So, but let's examine what I just said. When I went to school, there was, and still today, or it persists. You go to school all of this time, 12 years, then another 4 years, then another 4 years. And why do you do that path? You do that path because on the backside, you think you're going to get paid more,
mm-hmm.
right? That construct of money, you're going to get paid more for your time, right? That's why you do that path. And what you just said, and what I explained in the book, or in that post as well, is it's just an artificial construct. Today, with an internet connection, that learning is completely free. Completely free. You could get to anybody. You and I are talking from a tweet. You say you can get to anybody. You can get to the smartest minds in the world, PhDs, researchers, anything on any topic you want, for effectively free.
Mm-hmm.
Now, that's today. So what keeps the existing system going? Because if you examine both those systems, it's true on both sides. So it's free. Yet people are paying hundreds of thousands of dollars for an education on the belief that their job will be, they'll get a better job.
Mm-hmm.
And what creates it is just the momentum of the existing system. And a lot of people are trapped in what it used to look like. When our parents grew up and everything else, it looked like that. You get a better, you get into Harvard, you get a better job, everything else. I position it already doesn't look like that in a lot of industries.
Mm-hmm.
And over time, that illusion is going to break down, and more people are going to realize that it doesn't look like that at all, and more people are going to self-learn.
Yeah, 100%. So I'll give you a quick anecdotal story. My dad is probably One of the smartest people I know. He's a mechanical engineer. He came to the States, no English, no money, no connections, no anything, in the late 70s. And without a college degree, he's been a successful mechanical engineer his whole life. He has basically the equivalent of a, English second language high school diploma, if you will. So when I see that, there's no chance my friends can get into getting these jobs, without even a 4-year degree at this point, because it's almost like a high school degree in 2021. Even when I graduated in 2010, it's like society is also part, to your point, you feel like you need to go down this path because, hey, high school's over. What do I do now? Well, I guess I'll go to college. Some people shouldn't even be going to college, in my opinion. That's not from an intelligence standpoint. It's just from a motivations. It's from a who you are as a person standpoint. I feel like people are getting shoved into these little boxes or these categories without even knowing why they're doing the things they're doing in terms of going to higher education. So I think that's a great point. So I do want to transition. I know this wasn't the greatest transition in the world, but I do want to transition the conversation a little bit back over to Bitcoin in general, because a lot of my fans or followers, they're asking about it. So why, when you're proposing this this new system or this new idea or the key or the mechanism to this deflationary economy, why Bitcoin? Why not ETH? Why not gold? Why not Dogecoin? Why not GameStop equities? Why is Bitcoin the answer to all this?
Yeah. So in that same article, I go into depth on why that is the case. The case. So technology innovation, when you see something, a frame of reference I use for evaluating technology, whether this technology or team has a chance to be able to be successful. Mm-hmm. Does this have a 10x advantage for people versus the existing thing they're using? 10 times. And if it doesn't have 10 times advantage, it's very likely going to be a failure. And so first, let's examine that. Why? Because the existing market structure can change. The existing market can get more efficient. The existing market structure, where people are right now, there's not more marketing dollars to keep them there. You have to overcome all of that marketing, everything else. And if your thing isn't 10 times better, nobody, it's like a tree falling in the forest. Nobody hears, right? Mm-hmm. And yet a lot of entrepreneurs think my thing's 10 times better because I say it's 10 times better. I'm talking about something that the market is telling you, wow, this is the most incredible. And it's, especially if it had a viral loop network effect built into it. Mm-hmm. So, and so it's required today to be able to be seen through the noise, because our attention is being driven all the time, and we need something has to cut through the clutter. So I use a 10x framework to be able to cut through the clutter. Mm-hmm. And can it gain enough adoption fast enough to be able to have a chance to break free? Not a guarantee, but that's kind of a framework to use. Mm-hmm. So now let's apply that framework to Bitcoin. Does it have a 10x structure? Does it have a 10x advantage over gold? Or what does it have a 10x? It doesn't over money right now. It doesn't over, because it's hard to pay for your coffee with it. I'm not saying that won't exist in the future. It will exist in the future. Mm-hmm. On the second layer. But it had a 10x as a store of value over gold, which for 5,000 years has been the best store of value for humanity, proven store of value for humanity. So it has a 10x structure advantage over that. It's portable, it's divisible, it's all of the reasons. It's decentralized. The biggest thing for me is it's decentralized, so it can't be confiscated. So in my mind, here's an innovation with a 10x value that has possibility early on. So I've been following it for a long time, but still, just like an entrepreneur, it can make a whole bunch of mistakes. Does this work? Everything else, and so the community has constantly rallied around to fix errors, everything else. It's forked a couple times. The main Bitcoin is. It has proven its value as a store of value. Mm-hmm. And is getting more and more. And as the adoption rate is increasing, it's proving it to more and more people. And those people are coming on a network effect saying, I believe in this store of value. And now it's starting to hit this critical mass. Mm-hmm. So the question goes, So in that article, I didn't explain this very well, but a lot of people have asked the same question you asked. Now something else to actually supplant Bitcoin has to beat Bitcoin by 10 times. And just go through a thought experiment and say, what could beat Bitcoin by 10 times with it driving a network effect that the protocol itself is getting better and better, right? Because more and more people are saying it works. It is and it's driving out. How does something else get seen through the noise to cut through that clutter? I see it. I see the chance of that being really low. So to me, it's only Bitcoin. You can make a lot of money in some of the other coins, but to me they're more speculative. So if I thought where would I put money that I could be pretty assured that value would store through time, and it would be Bitcoin, and so I wouldn't have to look at it. That's where it would be the safest place.
So what are your thoughts to the common FUD, I guess, if you want to call it that, so the fear and all that stuff that comes around with, hey, what if governments ban it? What about regulation, things like that? My personal opinion on the regulation side is it could be a double-edged sword in terms of leading to mass adoption. But I just want to get your opinion on that, just from a government regulation standpoint. I guess, what are your biggest threats to Bitcoin that you can see?
I've gone down every attack vector to the sand and back up again. And let's say, so everybody should do their own research. Don't just trust me. What did they say in Bitcoin? Verify, don't trust.
Yes.
So everybody should do their own research on why this is critical and go down their own attack vectors. But most of the things that you hear are just driving fear and manipulation and everything else, trying to protect an existing system. And so I don't see one of those attack vectors having any sort of long-term implications to Bitcoin. In fact, like you said, some of them, India saying they're going to ban Bitcoin, actually creates more game theory for other governments to drive adoption, because there's more ability. I don't think India saying that can stop population of India from using it or from acquiring it. In fact, it might accelerate it, because what it effectively says, think about what that says. It says, by the way, same way China imposing capital controls in Hong Kong can't stop those people from getting their money out to put in our real estate. The money will find its safest store of value no matter what governments do. So short term, some of that could happen, implications to short term price, but long term, it actually drives adoption faster because it signals why they're doing it.
Yeah, it's kind of like cutting someone's tongue out, not allowing them to speak, but you're making it obvious that you're fearful of what they might have to say, kind of an analogy. What are your thoughts on Plan B's stock to flow model? I'm interested in your perspective on that.
So far it's right, and as you know, I've been on a couple podcasts with Plan B and Preston, so yeah, it's something I think until it's wrong, and keep following it. It seems to be a really good predictor.
Yeah. So my biggest yellow flag, this is the pit in my stomach when investing in Bitcoin. So I made it a point to have 10% of my net worth in Bitcoin. If I was younger, say if I was like in my teens or 20s, it'd be a lot higher. But with, trying to raise a family and all that, I'm just being like your typical, conservative, thinking about the future, even though I'm probably shooting myself in the foot by only having 10% of my net worth in it. But my point is that what would you recommend to people listening to this podcast, assuming they did their due diligence, assuming they read all the books, assuming they read all the articles? What percentage of, not necessarily your net worth, you can answer that question if you want, but what percentage of net worth did you recommend having in Bitcoin?
So a lot of people have asked me that question on Twitter and everything else, and I never answer for somebody else. And because it's impossible for me to know their life situation and answer for somebody else.
That's the right answer. Sorry to interrupt, but to everybody listening, that is the right answer. Thank you for saying that, Jeff.
It's impossible. And so if somebody's telling you what you should do, you need to do your own research to say what you're comfortable with. I'm perfectly comfortable if it went to zero, and I wouldn't like that very much. But I'm not actually in Bitcoin so I can make so much money and control the planet and everything. I'm in Bitcoin because it is the fairest way for society to thrive on the other side. It's way bigger than money for me. I don't care for people that are in it for money. Great. It's all of these paths lead to something that are create an equitable, fair society on the other side. And there's a whole bunch of rule changes or law changes that need to happen on the other side and how society functions in this new world we're moving into. But that's actually why I'm in it. As far as how much to do, so if you're young and have lots of income and you're then start putting some money and you could afford that risk. By the way, if you could afford that risk in your own mind based on that, put a bunch in. What do you want out of it? And what do you and can you afford that risk? I see it, and when I say risk, I need to go down this path. Most people would look at entrepreneurs and they would say, wow, those entrepreneurs are really, they take huge risks. They don't. Entrepreneurs are the best asymmetric bet takers on the planet. What they're really saying is, my time has more value here than working for somebody else here. And even if I fail, the learnings I'm going to get out of that time is going to take me to the next step to be able to have a way bigger impact on my time. So it's not a risk. In fact, a lot of entrepreneurs are the opposite. They're risk adverse. They just look at their time differently. So it's an asymmetric bet.
Yeah. When
I look at Bitcoin, I see that same asymmetric bet. I don't see it as a risk. I see it. So a lot of people would say it's risky today. What is more risky? Owning a bond at a zero coupon bond that has counterparty risk all the way down the pyramid. The entire thing is made up money, but it's always been made up, so it might keep going, versus Bitcoin. I would argue that it's just an asymmetric bet. It might be the best asymmetric bet that history has ever given us in Bitcoin. But again, what if 1% probability will take everything else, something that I don't see, an edge event happens, that's something that's wrong. Maybe you don't put all your wealth in it, maybe you do. So, but everybody needs to do their own research, how much allocation that they should do. But what I would say is everybody should have some.
Yeah, I like that a lot. I call it the sleep at night percentage. So you just allocate a percentage of your net worth that still allows you to sleep at night peacefully, even if that asset goes to zero. I think that's the most, practical way to go about it. I realize I never finished my thought with the pit in my stomach comment. What I'm seeing is a lot of correlation with equities markets. So if you look at March 12th, I believe, Bitcoin dropped just as much as the S&P 500 did. Is there any way that you can kind of alleviate that pit in my stomach for me selfishly on this podcast? And just what are your thoughts on the correlation lately?
Yeah, so I actually talked with Lynn Alden on a podcast on this same thing. So one of those edge cases that could happen. We know the existing entire counterparty risk all the way down the pyramid. There's nothing backing it, and except for more printing of money. And the more printing of money, the more people that are looking and saying, wait, what is money in the first place? Right. So, and more people are asking questions because you can't hide the amount of money that's being printed these days. And then and we know we've talked about what is driving Bitcoin and its value, because it's an escape valve from that. So I'm going to, just before I answer, what I would say, if you looked at those two systems, the only asset in the world that is not mispriced is Bitcoin.
It's a great point.
Everything else is mispriced by the currency manipulation, and everything on top of it, stocks, bonds, everything is houses, everything is mispriced. And so what's happening is Bitcoin is absorbing value from that system and over time. But if you actually measured everything you're pricing in Bitcoin, you would see the truth. We already live in a deflationary society, and everything's going down in price versus Bitcoin.
Mm-hmm.
That's the truth. Now, what could happen in the short term, not long term, because I think that structure, that's going to be what's happening. But what could happen in the short term? If governments, we had talked about it, if governments stopped printing, then you'd cause an unwind, and that unwind would start spiraling and spiraling. And as everybody chased hard money to take money out of the bank but remember, as they take money out of the bank, they cause it to unwind faster.
Mm-hmm.
As they take money out of the stocks to try to get out of things, everybody races to the exits at the same time, which causes the whole thing to unwind faster,
mm-hmm.
which would keep going to the sand. It would, and we probably know that won't happen. But could governments or central banks or anything else at some point, could that happen partway down that stack? And a whole bunch of destruction of wealth and value, and then they come in and try to reflate it? Yes, that could happen.
Mm-hmm.
And in that environment, Bitcoin will fall too. Everything will fall. Bitcoin will fall too. If that happens, buy more Bitcoin as fast as you can, because they have to reflate it. There's no way, because it can't go down to the sand. It
mm-hmm.
has to be reflated. And so that would be a really great opportunity if something like that happens, to accumulate more Bitcoin.
Makes sense. Great answer. Thank you, Jeff. I know you have about, I'd say 20, 30 minutes left, but the one question that I have that's been pressing is, what are your thoughts on Stephanie Kelton's The Deficit Myth, the modern... I already see you. So for the people listening, Jeff made a very visible sigh. I don't know if you're watching this on YouTube or listening on the podcast, but it was funny nevertheless. So what are your thoughts on just MMT in general, Stephanie Kelton? I listened to her episode on macro voices. I don't know if you listened to that episode with Eric and Patrick and Stephanie, but it was like a 25-minute episode. I felt like I really didn't learn much from it. I own her book. I haven't had a chance to read it just yet. What are your thoughts on MMT in general?
I understand why it sounds appealing, and I understand why and Stephanie's smart from a kind of a typical monetary policy theorists, everything else. So and she and her book's written well, but it misses the point. It misses completely the point. There's a whole bunch of things that it assumes. Number one, it assumes you always have reserve status forever.
Mm-hmm.
So you can print whatever you want. Does that seem logical?
No, I think no.
Name a country throughout. Why doesn't Rome have reserve status anymore? Like, when you when you manipulate your currency, other countries take their own actions to be able to drive their own. So why is China driving the digital yuan right now and trying to get their currency in play? For control of this exact same thing. Everybody knows what the game is, and every country is taking their own path.
Mm-hmm.
So it is impossible to drive that policy long term, and it creates more consequences around the globe because people don't. So one of the big failures in that book is that we'll have a reserve currency forever, and that's and that's clearly missed. Bigger than that, higher order, way higher problem. It's not dealing with first principles. First principles is this: technology is deflationary. Mm-hmm. We should be getting, our money should be going further and further and further, and we should be getting more for our money forever. And in that world, we wouldn't need as much. In that world, we wouldn't need as much labor, because everything would drop in price according to the free market, and it would get cheaper and cheaper and cheaper, and that labor could fall out. In other words, why do we use technology in the first place? We use technology to free our time. That's the piece that nobody seems to be putting together. Why in the world would we want to stop technological progress? Number one, we can't. Number two, why are we trying to stop it so much by trying to make more jobs, and the jobs to protect as an existing system that requires more jobs to infinity to keep growing against the natural order of things? Why would we do that? Because all we do is turn humanities into mice on wheels, around and around and around, wasting our time, chasing an illusion that was created, and that illusion was created out of monetary theory, like Stephanie Kelton's thing, that is just for control.
She would probably argue, the government's balance sheet is not like yours and mine, household balance sheet, where we have assets, liabilities, debts, credits, income, things like that. Why do you think we haven't seen, the $100 trillion bill, the Zimbabwe US dollar, if you will, with all this money printing going on? Is it velocity of money, just money simply not entering the system? Is it the petrodollar? Is it, the world reserve currency status? Is it the military? I mean, what are some factors that allow the United States to just print and print?
Well, all of the above. Technology is one of those, because if you're measuring, if you're measuring kind of deflation, inflation on that printing, if you look at the chart of things that are coming down in price, and people look at cherry pick items on things that are coming down in price, technology is becoming the backbone of the world, and everything's coming down in price. But if you drive a whole bunch of printing into that environment, some things will rise in price, like housing, education, healthcare. Some things will rise in price to match that. But technology is, you can look, what's your TV cost? What is your smartphone cost? What is all of the things on those devices cost? And so you look, wow, those prices are coming down still. And people go, and then when you measure the overall system, you say, okay, we don't have too much inflation. And you think it's still okay, because you're measuring it from a different world. What would that look like without the printing? So what it's saying, every price would be coming down, straight down. And technology would be falling even faster. So remember, when you look at those charts about CPI and you see, wow, what I get for my computer and technology and everything else, it keeps getting better. Remember, that price that you see, that deflation, is against the inflation as well. It's still overcoming that. So it's such a big factor to our lives today. And that what's happening is, today people are looking at it in their smartphones. People are looking at it in different things, but the base layer of that information is moving into everything. It's in all industries. So it's moving at that pace everywhere, and there's nothing that you can do. So if you keep doing that to that point, if you keep misallocating pricing, you create artificial signals in the market about where to store value, and ask the question now, where has the money, why has M2 collapsed? Because the money is misallocated. Money is chasing stores of value rather than productive use of capital. So look at what Apple's doing. I forget what then, is it $12 billion of the bonds? It's essentially zero coupon to buy back their stock. Why would they do that? Because it's the best capital decision that they could make. Why would an airline not sit on cash and buy back stock? Because the government just said, I'm going to make your cash worthless. I'm going to pay, it's going to be essentially a zero coupon cash. And I'm going to try to make it worth nothing. I'm going to try to inflate that cash away. So if you were a CEO sitting on top of that, and you were trying to save for a rainy day so you could acquire more airlines when they were failing, and the government said, I'm going to make your cash worthless, and then every airline, because of that, were buying back stocks, you would be fired as a CEO. So again, as you do this, as you drive that system that is all misallocated. Everything is misallocated. You drive individual actors in that system to make rational decisions for themselves. All of those decisions are rational, but they drive more fragility into the system.
So I'm glad you brought up the corporate side of things. And we're at about an hour here, so I'll ask one last question, and I'll get into wrapping up the show. And as always, I appreciate your time. Now that you brought up the corporate side of things, or the corporate strategy side of things, what are your thoughts on what Michael Saylor is doing with MicroStrategy? Do you think he's just, the gung-ho cowboy, or do you think other corporations will follow suit?
Michael Saylor is an incredible entrepreneur who essentially controls that stock and can make decisions not by himself, but he has a huge influence over those. And why I say incredible entrepreneur is that's what entrepreneurs do. They look at the risk reward, and they look at the asymmetric bet, and that's what Michael has done. He looked at the exact same things that I looked at. He read my book, by the way.
Nice.
And so, but he looked at the exact same things that I did. And a whole bunch of other people did. Preston, you, a whole bunch of this community, and before us, a whole bunch of other people in Bitcoin.
Mm-hmm.
And he realized, wow, this is a really great asymmetric bet, maybe the best of all time. Why would I have my money sitting in cash, like we're talking about,
mm-hmm.
when the government is essentially saying, I'm going to destroy that value? I'm going to put that money in something that is going to outperform. And Bitcoin, when you look at the landscape of different things that could outperform, it becomes by far the best.
At the time of this recording, he's actually having his, I think, corporate strategy, or introducing or pitching Bitcoin to other CEOs. You've obviously been a CEO. I think you've sold a couple companies. I'm not sure exactly how many, but you've started many, and you've had thousands of employees, as you mentioned. How do you feel like he's kind of, how do I say this? Because I post a lot of his stories on my Instagram feed, and people will say like, oh, he's a genius, or he's misallocating, or he's not being a good steward of his company's money or his shareholders' money. How do you feel about that? Do you feel like, say Bitcoin just somehow, it's never going to happen in my opinion, but say it just goes to zero tomorrow, how will Michael Saylor be looked at by his shareholders, or just people in general?
So being an entrepreneur, you don't create asymmetric value. You don't unless you have a thesis that is counter to everybody else.
Mm-hmm. Contrarian.
If everyone else believed something, then the value would have already been arbitraged away.
Mm-hmm.
So that's actually what entrepreneurs know. That's actually when I say he's an incredible entrepreneur. That's what's made him successful. He sees these points of value, and he creates these points. That's what all entrepreneurs do.
Mm-hmm.
They have a idea that looks different from the world, and they go after it with conviction. And the more that and then the market judges them, are they right or wrong? And that's what every entrepreneur knows on the path, that's the harsh judge of the world telling you if you're right or wrong, the free market.
Mm-hmm.
And so people, and myself too, but Michael, totally comfortable in that skin, right? I wrote the book knowing that the world was going to judge me, whether I was going to be right or wrong. The companies that I'm involved in, I know the same thing, and I'm totally comfortable with my thesis. In fact, that's actually why you do so much homework, so much on these hack factors. You go down everyone, and you're constantly looking for evidence that where could I be wrong? Where could I change this to get into something else? That is the process. So the more people that dismiss it, the more opportunity that there is, and the more potential you might be wrong too. Mm-hmm. So you're constantly surveying the audience, and that's so. You read that quote from my book where I talk about. I think it was a Bear Stearns analyst that talked about Jeff Bezos being the worst operator of all time.
Yeah. Yeah.
Right? And unless he can pull a magic bunny out of his hat, then the company was over. He gave all of the reasons that seemed like perfectly plausible reasons in 2002. why, or 2001, 2002, why Amazon would fail.
Mm-hmm.
And for those same reasons, Amazon is celebrated today. That's the point. There's a whole bunch of people that'll throw stones when they're measuring you from a different system, from something that looks totally different. And in the old system, they might be right. In the new system, they're completely wrong. And that's what creates it. Elon Musk, 18 months ago, he was a month away from going broke. He tried to sell Tesla to Apple. Apple said no.
Mm-hmm.
A month away from going broke. And so if you see what happened through that, and his Twitter feed and some of the stuff he was saying and the SEC and everything else, it looked like somebody trying to get out of jail, like they were trapped, right? And if you like look through that time, most people don't know he was a month away from going broke, because when you get through the other side of that knothole, people see he was right all along.
Mm-hmm.
Bezos was right all along. I think they're going to say Michael Saylor was right all along. Time will tell. And if he wasn't, market will punish him.
Love it. Love it. So we are coming up to an hour right now. I always end the podcast with a couple questions, especially if you're an entrepreneur. If you can go back in time, say you're the 20-year-old Jeff, you just got your first big boy job, or, whatever you want to call that, or graduating, what advice would you give yourself? Other than buy Bitcoin.
So if something keeps happening to you, it's not the world happening to you, it's you happening to the world. So it's so we have, all of us have this belief that says, oh, it's this problem, it's my employer, it's my job, it's my wife, it's my kids, it's everything else, and that's all externally focused.
Mm-hmm.
If it's internally focused, and it's always me who creates my destiny, and every other event is a byproduct of that, you'll still run into bad people, everything else, but you'll see where you are attracting them, or
Mm-hmm.
you'll see where you'll learn faster. And today, what's an absolute requirement is learn faster. And most of the time, the critical block to our own learning is our ego getting in the way. We don't want to believe it's us that's creating that. It's easier to believe that it's somebody else. But if you believe somebody else, you can't do anything about your thing, your thing.
Mm-hmm.
And so you'll probably, people listening to this will hear this in the front. You'll have a friend constantly do the same thing, hit the same wall, and you go, how can't they see that? Right? How could, and it's them, by the way. And then you'll realize, and you'll be doing the same thing in somewhere else in your life, and you can't see it either.
Mm-hmm.
So it's pretty normal. So if I said one thing, and I've gone through it too, and maybe I've hit so many walls on the way through, now I finally realize, I wish I knew this at 20.
Nice. That's a great answer. I love it. And then finally, other than The Price of Tomorrow, great book, by the way, highly recommended for everyone to check that out on Amazon. Other than The Price of Tomorrow, what book or just, piece of learning resource would you recommend to the audience?
Oh, wow. That's hard. I read about 50 books a year, and every time I get that question, they all go blank.
Yeah, sorry.
So Layered Money on this topic is actually a really good new book. Great book. I tend to read a whole bunch of different things. Artificial intelligence. I go down these paths all the way to the sand and back up, but psychology, how we think.
Mm-hmm.
So Thinking Fast, Thinking Slow, but a great book as well. So because if you can understand a whole bunch of how fast the world's moving and how you're most likely to misinterpret it as everybody else because of your own cognitive biases,
mm-hmm.
you'll now you can develop call it an algorithm for seeing opportunity. And so those are a couple. I can send you a couple more of Why Information Grows is a really great book.
Perfect. Yeah, thank you so much. I just reached out to Nick Badia on Twitter, and he actually responded as well. So there's another tweet interview that I'll hopefully get for this podcast, but he's the author of Layered Money, as you mentioned earlier. So everyone should go check that out as well before I interview Nick. But Jeff, thank you so much for your time. You're extremely generous. I really appreciate it. It was an honor to have you on. Where can people learn more about you or find you online?
Probably the best is just at Jeff Booth on Twitter.
Perfect. Thank you so much for coming on, Jeff. I appreciate your time.
No, it was great. Thanks.
Thank you.
Thank you for listening to the Whiteboard Finance Show. To read more about today's episode, visit whiteboardfinance.com. And don't forget to subscribe to Whiteboard Finance on YouTube. This show is for entertainment purposes only. Investing of any kind involves risk. While it is possible to minimize your risk, your investments are solely your responsibility. This show is copyrighted by Zlatic Media LLC. Written permissions must be granted before syndication or broadcasting.